Thursday, 4:30 in the morning, U.S. Eastern Time. I am not in the U.S. Eastern Time zone right now, just in case you're wondering why do I sound so chipper at 4:30 in the morning. That's because where I am, it's actually late morning, but I am able to control my trading computer virtually via Magic, I think. And so here I am. I am in 3 trades, as you can see, but this video is not about trading directly. It's about risk management. So let's get to this. I try to read every comment in our Discord server. It's difficult, but I think I get to most of them. I have been seeing in the past, not so much anymore, but I did see in the past such posts as I took 2 losing trades and I blew my funded account. I no longer really see this kind of post, thank goodness. Now I see more. I had a couple of losses of whatever, $300 to $500 loss, and I'm stopping for the day. So there was some kind of a daily max amount or number of losing trades, and the trader is done for the day. So before I go into what I have to say, I have to say this. And everything I'm going to say is my opinion. You should only trade in a way that is comfortable for you, because you will not be able to be successful trading in a way that is not comfortable for you. I'm just going to offer a couple of insights that I've gathered over quite a few years of trading, 17 to be exact. I think I've learned a lot, and I'm just going to share with you my view on things, and you take what you can out of it, use what you can, dispose of anything else. So first, let's kind of look at the big picture just to have an idea what we are dealing with in futures trading, and then move on to maybe specific situations. So let's talk about futures contracts. Let's take the NASDAQ contract, the E-mini NASDAQ contract. What is the value of this contract? Well, to figure out the value, we need to take the dollar amount per point and multiply it times the index. So it's $20, right? Mini NASDAQ, $20 per point times the index, which is around 20,400 or so. So quick math, the value of one E-mini NASDAQ contract is over $400,000. If you were to trade this $400,000 with a 10-to-1 leverage, you would need $40,000 plus with a 10-to-1 ratio. Now, what these prop firms, all of them, and different prop firms have different rules. Of course, I'm not going to go over all the rules, but a lot of them will offer you on a $50,000 account a max drawdown of between $2,000 and $2,500, and they will offer you between 5 and 10 E-minis that you can trade with this $2,000 to $2,500, which is essentially is your account, right? Because forget about the 50,000, you're not blowing $50,000 here. They give you 2,000 to 2,500. So if you are allowed to trade 5 E-minis, that means that you can trade well over $2 million worth of an asset with a $2,000 to $2,500 account. It is lunacy. It is fantasy. It is bullcrap. It doesn't exist. Despite of what they tell you, that they are looking for very responsible traders. They're looking for those who can really manage risk and trade responsibly. No, they're not. They are looking for gamblers who will take these accounts, pay money for them, and then blow them. This is the reality. I'm sorry if I'm spoiling any kind of fantasy you guys might have about these prop firms. It is true that a number of them have a path to a live account. I know because I am in a couple of those. I have live accounts with them. Um, but to get there, they still uh, like to filter, if you will, um, through the majority of the traders to get to those few who they will put um, in a live account. Why do I even bring it up? Just because they are basically playing with our brains. They try to convince us. They're giving us every opportunity to over leverage. And in futures trading, you don't have to do much to over leverage. Forget about 5 accounts. Just forget about that for a minute. Trading one E-mini, with a $2,000 max drawdown is way over leveraging. Again, think about this. Over $400,000 of an asset with $2,000 or even 2,500. Ridiculous. They are basically training you to trade in such a way that you will fail. I don't care what your methodology is. This methodology will produce losing trades. This methodology will produce consecutive losing trades at times, which would cause a drawdown. And this drawdown, even with a winning methodology, could be way more than $2,000 if you start trading irresponsibly. So now, against this background, I want to start getting more specific. By the way, before I continue, because I always forget, could you please click the like button? It just helps the video, it helps the channel, it helps us to be a bit more visible with YouTube algorithm or whatnot. So yes, again, please click the like button. Okay, so all trading is probability based. That is the foundation. You need an edge. What does that mean, you need an edge? You need a way to express this probability in your favor. So, either you have a high winning rate, or if you have a low winning rate, your risk reward is better than 1-to-1. I do know some traders with only about a 35-40% winning rate, but they are very successful because they have a reward risk of like 3-to-1 or better. Okay, that is difficult to do, and especially with prop firms, the way they're calculating drawdown might not be the best approach. So, if, for example, if you've been following the signals in the channel Markets with Gil, and he's going to have a live room coming very soon, either next week or the week after that. If you've been following his signals, you see that he has a winning rate of 70% or better. I'm just trying to be conservative here. 70% or better. What does that mean? Well, that means that, let's say, out of 100 trades, he's going to be right approximately 70% of the time, and approximately 30% of the time, these are going to be losing trades. Now, that's, of course, in general terms. A 7 out of 10 win rate does not mean that you write 7 trades in a row and then you wrong 3 trades in a row. I wish, right? Because then it would be very simple. No, it could mean you can be right 10, 11, 12 trades in a row. By right, I just mean these are winning trades. And then hit a losing streak of 3, 4, 5 losing trades in a row. I mean, we all understand that is part of probability. On any given trade, absolutely anything can happen. This edge is only expressed over a sample of trades. Now, if you are over leveraging, meaning you are eating into your available drawdown very quickly, if a particular trade is a losing trade, you are not allowing probability to work itself out. Again, 7 out of 10 does not mean that you first win 7 and then lose 3. On any small sample, you can hit a winning streak or you can hit a losing streak. When you are over leveraging, you are not allowing, if you are stuck in a losing streak, for probability to work itself out and start having winning trades. So for example, if you are trading, let's say, one E-mini Nasdaq and you have a daily stop of $300, let's say, well, that's only 15 Nasdaq points. 15 points in the Nasdaq is a hiccup. I mean, it becomes completely random and meaningless. There is nothing wrong per se with having a $300 daily loss limit if that's what you want to do. I mean, that's up to each and every one of you. But I would say that if this is your daily max loss, you have no business trading an E-mini contract, especially not the Nasdaq. What is reasonable if you're looking for a $300 stop daily max loss in the Nasdaq? I would say one, maybe two micros. One or two micros. And this is where I get the pushback because I had numerous one-to-one sessions with a lot of different traders, and that's when people say, but then I will not make a lot of money. And of course, yes, I cannot argue with that. You will not make a lot of money, but what will happen, for example, again, if you follow the signals in Markets with Gil, you will find that consistently your account will be growing. After every trade, no. No, because you will have losing trades. But because you're not going to be hitting your max daily loss and stopping, you will allow probability to start working itself out, and the next few trades that are posted might be winning trades. Do I know for a fact they're going to be winning trades? No, I do not. But there becomes a pretty good probability that there will be winning trades, and if you took a couple of losses, you're going to have a way of recovering as opposed to over leveraging and then stopping for the day, and now you have a loss. But it's not only that. You see, just because you are stopping for the day does not mean that tomorrow you're going to start with a winning trade. That's not how probability works, right? On any given trade, the probability remains the same. If it's 7 out of 10 today, it's not going to be 9 out of 10 tomorrow. It's still 7 out of 10, which means you can be stopping for today because you reached your max, let's say, daily loss. You're going to come in tomorrow and take a loss on a first trade again. And this restriction that you put on yourself occurred because you were just trading too heavy, too much leverage. You stopped for the day because you're trying to be responsible. You say, I'm not going to lose more than $300. For that, you should be congratulated. However, in reality, you simply are not giving yourself the opportunity to be successful. A similar problem occurs when you maybe put the money part aside and just say, well, if I have two losing trades in a row, I'm done. And again, you just need to understand that if you do that, and if that's what you want to do, by all means, but if you do that and you come back tomorrow, it is not guaranteed that all of a sudden the first trade is going to be a winning trade. You can hit the same two losing trades tomorrow morning. But if today, after taking two losses, you stuck with the signals and you probably recovered, can I guarantee that? No, I cannot. But the way probability works, probability eventually will kick in, and there is a very good chance, and we've seen that in Markets with Gil. Again, if you follow him, sometimes late in the afternoon, he comes up with signals that just make up all the losing trades with those one or two or three last signals of the day. But if you stop, you're just not giving yourself the opportunity to participate in these trades. And so, on a bad day, let's call it a bad day, where you might finish break even or maybe even slightly below break even, you take your full loss and you stop. Again, just not allowing probability to work itself out. And I suspect, if you have the rules, if you have a rule of two losing trades, again think it has to do with the money amount. Because if these two losing trades amounted to $80, let's say, as opposed to 500, you probably would not mind giving yourself the opportunity to take the next signal. You see, again, the common denominator here is the how much leverage you are using. I mean, that is the key, because so much leverage is available and it's so tempting. You can take one contract and make $500 with it. The temptation is there. It is tempting to really over leverage, but I tell you, if you really want to make it in this business long term, if you don't want to keep blowing accounts, I I challenge you to try and blow an account following the signals in Markets with Gil to the T, following his signals. I challenge you to blow a $50,000 prop firm account trading two micros. I challenge you. It's going to be difficult. Again, nothing is impossible. I don't want to say it's impossible, but it's going to be difficult. I don't even see how it would happen. Are you going to have losing trades? Yes. But if you continue to follow his signals, I'm telling you, as long as you don't over leverage, you're going to find that overall you are profitable. Let me address now the issue of, well, but I'm not going to make enough money. So now, the money part has to do with unrealistic expectations. Let's go back to how much money is available to you, again, let's say on a $50,000 account. It's either 2,000 or 2,500 depending on the firm, right? But it would not be fair to just count that money, because in reality, if you can trade, let's say, 5 contracts, 5 E-minis, then there is also some margin money. So Ninja Trader, for example, to trade one E-mini Nasdaq, you need $1,000 in margin. So we add this 5,000 to, let's say, the 2,500, and it's a $7,500 account. This is what you are dealing with, right? 2,500 in available drawdown plus 5,000 in margin money. Okay, 7,500. If you trade two micros, and let's be super conservative, let's be ridiculously conservative here. Trading two micros, let's say you make $20 a day. Let's say this is your goal, $20 a day. Can you achieve that goal following either my signals or the signals in Markets with Gil? Yes. 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 5 points, 5 Nasdaq points on two micros, $20 a day. Sure. Okay. $20 a day times 20 trading days in a month, $400 times 12 months, $4,800. So On a $7,500 account, you can achieve close to $5,000 return. So that is better than a 60% annual return. If someone came to you and told you that they have a way to have a 60% annual return, you would slam your door in their face because it is way beyond anything that is realistic. You're listening to this and you say to yourself, this guy is full of it. Why should I bother with 400 a month? I'm just showing you just how unrealistic we've been programmed with this futures trading idea. And that is the reason, by the way, why most people end up over leveraging, and that's why the vast majority of traders are not succeeding. Now, I do agree that 400 a month is not a heck of a lot of money, but there are what, like 26, I think, the latest count of futures prop firms. Most of them allow you to have multiple accounts. You can have 10 of these funded accounts where you trade 2 micros and you copy across with a trade copier. Well, then the 400 a month becomes 4,000 a month. And while I do understand that 4,000 a month is still not very exciting, my question to you is, what is your probability of blowing these accounts if you are trading 2 micros? In time, as you improve as a trader, you might want to trade more than 2 micros. Again, I am not telling you the leverage you should have. I am just asking you to think about what you are doing right now. I go to this idea that trading one E-mini, in my opinion, with a $2,500 drawdown is just over leveraging. For an average trader, it's just too much. If you are more experienced, it might be okay. And that's a maybe. It might be okay. But if you truly want to make this long term, if you want to stop blowing accounts, reduce your leverage. This is my message here. Having a smaller return on investment is still better than blowing the investment. I mean, am I right about that? November is around the corner. Try it for the month of November. I think Markets with Gil is going to have a live room in November. Try taking every one of the signals that he recommends in that live room, which is coming, and try doing it in a much smaller size. Unless you're trading 2 micros already, in which case, congratulations, you're ahead of the game. If you are trading big and as a result you have to limit yourself with the number of trades you are taking because you're either hitting the daily max loss as far as money or the number of trades, which again I think has to do with money. I'm asking you to allow probability to work itself out and then see how profitable or not profitable you are. But I will tell you, if you follow these signals that Markets with Gil has and you are trading 2 micros, it will be very difficult to blow an account. And I think to a lot of you, just going 1 month without blowing an account is already an accomplishment. So at least grow in that way. How about 1 month without blowing an account? So that's my message in this video. Thank you all. I really hope it helped. If you have any questions, you can leave a comment. You can get in touch with me directly. All the information is in the description. And when I created this community, I wanted a community where everyone is profitable. Maybe I was a bit naive. Uh, I found out it is definitely much more complicated than I thought it would be. But in any case, please reduce the size of your trades and just see what happens. Thank you all. See you next time.